Hi, very good evening, everyone. Welcome to this exclusive webinar session, once again conducted by Bajaj Finance Limited for their esteemed customers and the investment affinity users who want to gain the understanding of how the markets are behaving, how the portfolio will be impacted with the current scenarios, and what are the new opportunities coming up which you can include in your investment uh, portfolio so that you can gain as per the markets, right? um, as far as know that yes, there are so many NFOs coming up this month, and a lot of AMCs are coming up with a very unique kind of strategies. And there comes one of the India's biggest AMC or asset management house, Axis Mutual Fund, which is one of the top three AMCs of India, and managing now close to about to reach out to around 3 lakh crores of AUM, and having 60 plus mutual fund schemes in their portfolio. They are coming up with a very new and attractive, and I believe the one of the best category of funds, the NFO, which is coming, which is excess consumption fund, right? Excess consumption fund, as you can understand from the name, a lot of people says that yes, this decade is for India. Why? Because the consumption will never go down for India, right? But when it comes to consumption, it is not only about the tangible goods, but there are non-tangible goods as well, where the consumption arises. In consumption also, it is not a limited theme, it's a very big theme. And I believe the expert who is the well-known personality, Ashish Gupta, right? Let me just take an opportunity to let you know about Ashish. He has recently joined AMC last year in March 2023 as the CIO, Chief Investment Officer for Axis Mutual Fund, and he's responsible for developing, communicating, and driving the investment strategy across all product segments of the fund house. Ashish has a rich experience of 25 years across varied industries, and his last stint was with Credit Suisse as the head of India Equity Research, where he actively tracked the banking sector in 13 Asian economies. He has a strong understanding of global and regional macroeconomics and began his professional journey with IDBI. Ashish was one of the earliest to identify the asset quality cycle in Indian banks in 2011 and authored several more reports, include the House of Debt series. Additionally, he is an independent director of SIDBI and appointed member on IRDAI's consultative committee on investments, and also the chair of India Philanthropy Committee of Credit Suisse. As far as education is concerned, Ashish holds a master degree in management from Mumbai University and a qualified CFA. Without taking much time, I welcome Ashish, and we invite you to share your thoughts on the running NFO Access Consumption Fund, which opened on 23rd of August, and it's open till 6th of September. What exactly it is offering? What is the investment philosophy of the AMC? What kind of sector funds will be part of this particular NFO? And what kind of investors should consider this NFO to be part of their investments? So over to you, Ashish, without taking much time. Thank you.
Okay. Okay. Thank you, Mohit, for that kind introduction. And thank you, Bajaj Finserv, for hosting this call for us and really connecting with your clients and investors. I think, first of all, let me kind of reiterate what you said that India's economy and the macro is on a very sound footing. Really, in my almost 30 years of tracking the Indian economy, we have not seen the macro fundamentals so strong. Right? If you look at all aspects of the macro, whether you look at India's external account position, it has never been this comfortable. Today, we are sitting at record level of reserves. India's currency has been stable despite all the rise in global interest rates. If you look at the government finances, they have been improving year on year. You may recall during COVID, our fiscal deficit had breached 9% of GDP, and it is expected next year to come below 4.5% of GDP, right? So it's going to more than half from really the peak COVID levels. If we look at the GDP growth numbers, they consistently have been coming ahead of all estimates, and inflation has been firmly under control. If we look at really the corporate sector, because that is what we buy in the stock market. So if we look at the corporate sector is very deleveraged. There's really no major company which has a large amount of debt liabilities that may be distorting their financials. If we look at the financial ecosystem, um, both Mohit and I are part of, you look at banks and BFCs, they are all in very fine health. So we find the macro backdrop very strong, and that is, in my mind, something that continues to provide confidence to the equity markets. Of course, we have had very strong gains in the equity markets now for the last 5 years almost. And last 4 years, we have had almost 24-25% CAGR return in the market. So a market has continued to be a very strong. Until now, it has been backed by earnings. So if you see corporate earnings growth also has been to the tune of 23-24% CAGR. And today, as we sit at this juncture of the market, uh, valuations of the market are not cheap. So market is trading at about 21, 22 times earnings. Many companies that have high growth expectations are actually trading 25 to 30 times earnings. So it is very important for us as investors to be confident about which part of the market we should be positioned in when the multiples are high. Because when multiples are high, margin of safety is low. And the two ways to address this is really look at what are the structural themes in the market, companies and sectors which are going to grow for the long period of time. And because at these kind of multiples in the market, only when long-term growth prospects will be met will you have good return. Otherwise, current earnings, next quarters of growth or next 2 quarters of growth is very well discounted in the market. Uh, so, with this backdrop, we have been thinking of some themes. So last year, we narrowed down on the manufacturing theme, and that has continued to play out as expected. And given in the last 3 years, the focus has been so much on the cyclical part of the market. Whether it is the energy cycle, whether it is the PSU cycle, whether it is the investment cycle, we felt that consumption, which is really the bedrock of the Indian economy, has been kind of lost bit of its attention. And we find that there are attractive long-term opportunities in this theme. As you all probably know, consumption accounts for nearly 60% of the Indian economy. And we are at that point of the economic cycle where per capita GDP is crossing a level, and historically it has been seen in several economies when per capita GDP starts crossing $2,000, $2,005 per capita. There are multiple products where there is literally a hockey stick growth in its consumption. And in our everyday life, we kind of see that as well. And we want to, therefore, go back to some of these structural stories. We want investors to focus on some of these structural stories. And that is the intent behind this consumption fund, that it offers a long-term opportunity for the investors to play one of the strongest themes that drives Indian economy. And Megha, if you could share the presentation, maybe I'll take you through some of the features of the fund and our thought process.
So Ashish, you can guide Megha which slide number you
Okay,
want to highlight.
okay, sorry. Unfortunately, the slides are not showing for me. One second. Let me then open a hard
Sure, sure.
copy of it.
We all understand the hiccups of technology, so we are with you. Is it visible now?
Unfortunately,
Megha,
it
if
is
you can
not.
try to reshare.
So, uh, okay. So I do have the.
Yeah. Is it visible now, Mr. Gupta?
No, it's not. But if it is visible to you and everyone else, then maybe I
Yeah.
can use the hard copy that I have and
Yeah,
run through that.
absolutely. You can just mention the slide number and we can show it on the screen.
Okay. So this are you on the do you know slide, which is the second slide?
Yes, we do.
Okay, great. So, so I spoke about the fact that consumption is a strong underlying multi-year theme for India, but consumption is a very dynamic theme, and we are seeing multiple changes happening in consumption, in the patterns of consumption. And we just maybe to start off highlight some of them, right? So for example, uh, wedding in India is the second largest consumption sector after food, right?
Yeah.
This is very unique to India. It drives several investment implications. For
Sure.
example, the jewelry industry in India. It is literally not a discretionary purchase, but really one of the largest parts of the consumption basket for an average Indian household, right? We are seeing new trends emerging not only on what we consume but how we consume. So, quick commerce is now part of everyday life for each one of us, right? We are seeing as income levels rise, it is not only needs that are going up, but wants that are also going up.
Yeah.
And luxury is a new asset class that has emerged. We are also seeing the changing profile of decision makers. So women are becoming more and more the decision makers, and we are also seeing in the last particularly 12 months increased focus on of the governments, both center and state,
Yeah.
that are going to drive consumption a lot more. We saw in the union budget movements like the new employment benefit scheme, the tax incentives that were given. In addition, several states have initiated income transfers programs, right? So I think this is something that will also aid uh, the consumption cycle, which has been relatively weak post-COVID, to have a stronger showing.
Right.
If if we go to the next slide,
Yeah.
right, uh, uh, this is just to highlight how the consumption trends are changing, right? So, for example, men, particularly men, used to kind of have limited apparel, footwear, right? The kind of choices that are on offer because people are consuming different varieties has gone up manyfold. Uh, uh, I think earlier people used to buy stuff primarily from the Kirana stores. Now there are all kinds of modern retail formats available to them, including supermarkets, including online, as well as social media. In fact, one important change here also has been that what drives people decision making. So earlier, people used to rely on advertisements really as a source of information for their consum- consumption decisions, but more and more people are using user reviews to guide that, right? And there are several companies which are now emerging, several platforms that are emerging that are driving this change.
True.
Uh, Mega, if you move to slide 5.
The next one, Mega.
Yeah.
Yeah.
So consumers are moving, as I mentioned, beyond the basic needs. This is visible across segments. So you are seeing really demand for the organic food, low calorie
Mm.
food increasing. There are multiple new kinds of restaurants that are coming up, and packaged food as a category has grown multifold, right? So this is just to again reiterate the point that the growth for many of the companies, many of the products, what will not be just driven by the fact that GDP will grow at a certain pace and therefore consumption will grow at a certain pace, but within that, because some items will grow multiple times the demand that used to be there because this shift in changing consumption patterns.
True.
Next slide. Uh, we are seeing this not only for FMCG or apparels, we are seeing this even in the biggest value items. So, for
True.
example, in real estate, earlier people used to really, based on their budget, try to maximize the carpet area of the apartment that they
Mm.
were buying in, right? But today we are finding, for example, it is not as much just about maximizing the areas, it's about maximizing the amenities that are available, right? So there is a change in what consumers are looking for. We are
Yeah.
seeing this even in the automobile industry. Earlier, auto demand was virtually driven by a single factor: what is the mileage available on the vehicle? From there, over the past 4 years, we have seen demand for SUVs increase multifold,
Yeah.
and in fact, now we are seeing increasing adoption of EVs. And again, this
Mm.
has very large investment implications. So, if you look at the various four-wheeler producers in the country, uh, 5 years ago, 60% of market share was with one company.
Right.
And because they were dominating in the hatchback segment.
Mm.
In the last 5 years, from about 35% SUV share in total four-wheeler sales has increased to 60%.
Right.
And therefore, you find four-wheeler manufacturers who were SUV dominant, they have
Mhm.
seen nearly a 3 to 4x increase in their stock prices because they were in the right segment, right? If you see the overall four-wheeler industry, the growth has been much more modest in that, but companies that were really beneficiaries of the trend had a multifold increase.
Got it.
If you go to the next slide, you'll see that now consumers are demanding convenience.
Mm.
Consumers are demanding customization. There is focus on sustainability, and premiumization is one theme that is actually visible across virtually all categories.
Yeah. Mm. The shift
Uh,
in shopping experience.
yeah. So actually, in interest of time, maybe we can move directly to
Yep.
slide 12.
Sure.
So these six, we believe, are some of the strongest structural drivers of consumption, right?
Yeah.
The first one, which I talked about in my opening remarks, is the rise in per capita income.
Sure.
The second is the favorable demographics, which has been a source of India's strength now for multiple years. Another one is urbanization, as more and more people move from rural to
Yeah.
urban India. We spoke about premiumization. The two other themes that are very important drivers are digitization, uh, as well as availability of easy credit, right? And I'm sure that Bajaj FinServe, both of these are very close to your heart.
Absolutely. Yeah.
Uh, if you go to the next slide, you'll see how India's per capita income is expected to grow. And we expect uh, the inflection point to have already been crossed. And
Mm.
we have seen, as you can see on the chart on the right, the crossing of this inflection point being a big booster to consumption demand, right?
So,
And the rationale for that is simple. So, if, for example, if per capita income is $2,000, and let's say theoretically, to meet the basic needs, someone needs to spend $1,800, then
mhm.
the disposable or discretionary income is only about $200, right? And if, let's say, over the period of time, this $2,000 becomes $3,000,
Yeah.
uh, the discretionary income will actually increase from $200 to $1,200, right?
Mm.
So while the increase in per capita income over the period of time is only about 50% from 2,000 to $3,000, but the growth in discretionary income in this example is nearly six times, right? It will go up from $200 to $1,200. And
Yeah.
that is really what drives the big shift in consumption.
Got it.
If you see slide 14,
Yeah.
what we are seeing is the number of households in India that are moving into the consuming class uh, really jump up meaningfully with the shift in per capita income, right? And if you see the upper middle class, the increase in number of households is almost 50%. Uh, uh,
Mm.
so out of India's, let's say, broadly 300 million households, today 100 million households are in the consuming class, right? And if 300 million households in 5 years will be about 320 million households, but out of 320 million households, you will have almost 155 million households being in the consuming class. So the consuming class increase is going to be actually almost 55%.
Mm. Okay.
If you go to slide 16,
Yep.
I
Demographics.
think yes, and here I think we have to be consider ourselves very fortunate that we are living in this age when you'll see over the next 5 years, India will account for nearly 25% of world's working population, right?
Yeah.
And this is really a very strong underpinning for consumption. We all know consumption for anyone is maximum during his working age. So while you are a student or you are a minor, or you are dependent on what your parents buy for you. And I think post retirement, the focus is on savings and medical, right? So the consuming age group correlates very strongly to the working population.
Hmm. On
If
the
you
right hand side,
see,
Ashish, I can see the interesting trends of internet searches.
yes. So, and in fact, this actually gives us lot of insights into what to buy, etc.
Yeah.
So, one of our best performing stock ideas has been a
Hmm.
company that got searched more as name of the company store near me, right?
True.
So it actually throws up very good investment ideas and really
Hmm.
gives us a early signal.
Interesting. In fact, it is quite visible that people are moving from essentials to non-essentials, or maybe to a luxury, or maybe something which can add value to their life. So that is where the people are shifting towards. Interesting.
Absolutely.
Yeah. Next slide, Mega.
Yeah, next slide basically talks about how urbanization is going to impact us. And one, urbanization also means, beside the change in wallet share, right? So if you see the two pie charts on this slide, you'll see how the consumption basket changes when someone moves from rural to urban center.
Hmm.
But it also means that once you come to the urban center, the exposure level you have to the various brands, to the media also increases, right? And the appetite to consume also goes up significantly because you are getting exposed to all these elements.
Yes.
Uh, the
Next.
next slide highlights the
Hmm.
trend of premiumization. And again, we all know mobile phones in India penetration has been growing, and that has been a very structural theme. But within that, the amount of premiumization we have seen is actually surprising even to us, right? We have within mobile phone the penetration of smartphones increasing, but
Hmm.
within smartphones, if you see just in the 4 years, penetration of iPhones has gone from 1% to 6%.
Yes.
Similarly, if you see 65-inch TVs, right, their penetration has gone up from 5% to 12%, right?
Hmm.
Smart ACs have gone from 25% to 75%. So if you get the trend right, you don't just capture the fact that AC sales will grow or smartphone sales will grow or mobile phone sales will grow, but
Yeah.
really the opportunity can be of growth can be much more if you get the premiumization trend right as well.
Absolutely.
Yeah. So slide 19 talks about the shift really from hatchbacks to SUVs, which are now
Hmm.
75%, nearly 75% of volumes. This I already spoke about, so let's move forward.
Sure.
On slide 20, again, uh, 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 we talked about how detailing is changing. But the point I want to highlight here is not the fact that it is changing, but what is the headroom for growth. So yes,
Yeah.
e-commerce penetration in India has gone up, but it is still one fourth of what it is in other markets, right? So the headroom for growth is also very large, given all the enablers like high mobile phone penetration,
Yeah.
cheap data rates. we don't see any reason why these trends cannot accelerate further.
True, absolutely. I believe this is a very insightful data, and we can see from the macro level, this is very relative for the investors, I would say.
Sure.
Great.
If
Yeah,
you go
maybe.
to slide 22, and I guess this is one part I need to spend less time on for Bajaj Finserv customers. But I would like to mention that if you see credit cards, for example, in 4 years, from 50 million cards, we have grown to 100 million cards, right? And that just tells you we have a very rapidly increasing consumer base and consumers who now have access to credit at very reasonable rates.
Yeah. In fact, the spends is almost 2.5x in the last
Yes.
4 years.
Yeah.
Interesting. Okay. Next slide, Mega. Yeah.
So, so again, I think there are several environmental enablers as well, whether it was the migration to the GST, FDI in retail coming. I spoke about income scheme for women coming through. So all these are enablers that will mean that this theme is very well positioned for the coming few years.
Right.
Okay, so let me move to the part where we talk about why invest in consumption now, right? So if you move to slide 26,
Yep.
we want to actually underscore this point that consumption, the way we are looking at this thematic fund, is that it is a very broad-based consumption basket. We are not really kind of confining us to say FMCG or any one particular segment of consumption. We want to play a broad themes of consumption across multiple segments and product categories. So for consumption, it is not just FMCG, it is also about food, it is as much about telecommunications, automobiles, even real estate. So all these are integral part of consumption. And the reason why we want to keep the benchmark very broad based is that we want to ensure that uh, the experience of this thematic fund is not cyclical, right? We want to ensure there's a broad basket of companies and segments that the fund manager can invest in, and therefore, say, theoretically, some parts of it. So, for example, real estate can be cyclical, right?
Yeah.
So at that point of time, the fund manager has ability to go into other segments and really
Absolutely.
ensure that there is a more consistent investment experience the investor has, right? Similarly, FMCG, we have seen for multiple reasons has been struggling over the years, but this fund is not just about FMCG, right? So there is enough opportunity for diversification, and all these segments are not correlated with a single cycle, right? So all of them have their own independent cycles, and therefore one part of it can be in up cycle while the other is in a down cycle and can offset it. So that was one of the key reasons why we chose this as a theme, not just because it's structural, but it is also because it is very broad based.
Got it.
If I move to slide 28,
Yep.
because consumption has been a key part of India's economic journey, and we believe it will continue to do so. We have seen the stock market has also recognized that over the years. And this consumption index that we are benchmarked to has actually uh, outperformed the broader market most of the years in the last 15, 16 years. Another important point to look at is the fact that uh, when there's a drawdown in the market, and if we look at the two big drawdowns in the market, one the GFC in 2009 and the other the COVID, this segment actually outperformed the broader market as well. So one, it kind of has outperformed in most of the years in the last 15 years, and typically because this is a more secular and consistent theme during drawdowns, it also tends to outperform.
Okay.
Just quickly on the kind of matrices we are looking at. So these are companies where ROEs are relatively much higher compared to the market average. The average ROE is around 20% compared to 15% for the market. And earnings growth expected is also between 20 to 23%.
Got it. May the next slide, please.
Yeah, so this was about it that I wanted to share. But
Okay.
I'm happy to take questions or thoughts that you might have.
Sure. So one prime question, Ashish, for the people, that how this fund is different with other thematic within the same category. You have told that yes, currently diversification is more towards FMCG, and this is beyond FMCG. Any idea of how the construct will be in terms of the sectors within consumption?
So, see, the benchmark FMCG weight is nearly 34%, but we will, as of now, unlikely to be that higher weight. And I think one can look at the construct of our existing funds.
Yeah.
In most of our existing funds, we are currently underweight FMCG, we are overweight real estate, we are overweight telecommunication, we are overweight retailing,
Hmm.
we are overweight automobile, auto sector. So that can give you some idea of our thought process, which parts of the overall consumption space today we like better.
Okay. I think this is very well said, Ashish. And I also believe that consumption is something which will never go down in India, considering, as you rightly said, our per capita income is going up. We are a young country. And the kind of consumptions we see in the right segment at the right time is very important. And that is
Yeah.
how I also have a full faith on this particular NFO launched by Axis, that this will definitely gonna be a very successful NFO, considering it aligns with the company's growth and country's growth, as well as company's vision for next 20 years, I would say. Okay.
Yeah.
What kind of investor, any specific category of investors should consider for this fund, or anyone who is a young investor or maybe a seasoned investor should also consider this fund as an investment portfolio?
No, definitely. And I think one, I always tell that people who have a multi-year time horizon should only consider all the fund and equity
Yeah.
as an investment class. Because it's the investment asset with the longer duration, right? So if
Hmm.
you have a long duration outlook for your the investment, then do consider this. The second thing I would like to highlight is that do not think of this as a defensive strategy, right?
Yeah.
While I mentioned that typically in drawdowns it tends to outperform, but the idea of this fund is to really look at growth companies. As I
Yeah.
highlighted, the growth being offered by these companies today, of course, if the forecasted growth is better than what is being the overall average for the broader market. So we are actually looking at companies which are benefiting from the underlying changes, trends in consumption, on how consumption yeah, is demands are met
Yeah.
to have a high growth outlook. So it is not defensive. Do expect us to be positioned in growth companies.
Absolutely, absolutely. And I believe there comes the role of the renowned EMC and the fund managers of Axis, who will make sure that customers' uh, money is invested at the right time and the right place. And investor also a message from our side as well that longer the period, right, chances of having lower returns or maybe the risk of investing in equity also goes down. So always consider a decent period of time whenever looking as an investment in equity as a proposition. So we need to have a patience, we need to have to play a long game, that we have to stay invested, and that is how the winter comes, and the compounding effect also come within the investment. One of the last
Absolutely.
question, Ashish, SIP or lump sum at this point of time? So, what is the
I
right
think
way at this point of time, consider the market scenarios?
so. I think SIP is a good way to invest, and I think it is really dependent on investors' current investment and allocations, right? So if he's underinvested in equity, or if he's kind of probably in a cyclical kind of theme. So maybe you now need to get into more structural themes, and there
Got it.
he can look at lump sum. So I think it is
Right.
really dependent on the investor and his current asset allocation.
Absolutely. And in fact, I would say, Ashish, money is, of course, sitting idle in customers' accounts. And considering the kind of subscription we are seeing in IPOs, right? Every another IPO is getting around 10x or 15x of the subscriptions. So that is what I would, as Ashish rightly said, it all depends on the kind of diversification you are looking for. If you have spare funds, of course, considering your own existing portfolio, investment portfolio, you can consider to park lump sum amount also in the NFOs up to a certain exposure limit as per your portfolio. Plus, SIP is always a evergreen strategy to invest, to stay invested, considering the disciplined one, especially for the young investor and the new investors who want to enter into the market and who want to increase some kind of exposure into the equity. Rightly said, Ashish. And with this, I take a pause. I'm done with the question because other questions we have already covered during your presentation. And thank you so much, Ashish. And we wish you all the best for the outstanding performance in the NFO. And of course, you guys are adding value to the industry. And I believe with this particular kind of theme, we will bring new investors, the first time investors, especially into the industry. And for the viewers who are connecting with this webinar, I would definitely suggest that yes, whenever you are investing, always consider the reputation of the AMC, the kind of investment philosophy, and the new asset category which is having a future for the country. Right? I believe these are the basic parameters. Plus, you have to stay invested for long so as to minimize the risk of lower returns. And that is a kind of guidance we can give. And you can definitely explore our mutual fund app, which is Bajaj Finserv app, for more information, and all the links and all the relevant information related to access consumption NFO is already provided on the website of Bajaj Finance as well as the mobile app. And thank you so much, all of you, for joining in. And have a good time and happy Janmashtami to all of you. And same to you, Ashish. And thank you for
Thank
your
you,
time
Mohit.
and valuable
Thanks for
inputs.
hosting me.
Thank you so much. All the best. Yeah. Thanks.
Thank you.
Thank you, everyone.